While Bitcoin is stumbling and many investors are heading for the exits, an unlikely newcomer has quietly become one of the hottest names on Wall Street. Its name? Hyperliquid. And its native token, HYPE, is attracting hundreds of millions of dollars from investors who, just weeks ago, had probably never heard of it. So what exactly is Hyperliquid? Why are investors piling into it while Bitcoin and Ethereum struggle? And could this be the next major evolution in crypto investing? Let's break it down. For most of 2025, the story in crypto revolved around Bitcoin ETFs. Institutional investors poured billions into funds such as BlackRock's iShares Bitcoin Trust, IBIT, helping push Bitcoin to new highs. But recently, the tide shifted. Bitcoin stumbled. Ethereum weakened. Spot crypto ETFs began seeing money flow out. Yet, amid the panic, one corner of the market experienced the exact opposite. Hyperliquid ETFs exploded higher. Funds tracking HYPE reportedly attracted nearly $160 million in inflows within days of launching, even as traditional crypto products were losing assets. To many investors, that raised an obvious question. What do they know that everyone else doesn't? Hyperliquid is a decentralized perpetual futures exchange built on its own blockchain. That sounds complicated. Here's the simple version. Imagine combining the speed and sophistication of Wall Street trading platforms, the 24-hour accessibility of cryptocurrency, the transparency of blockchain, and removing the middleman altogether. That's Hyperliquid. Instead of relying on traditional exchanges, users trade directly through decentralized infrastructure. The platform specializes in perpetual futures contracts, allowing traders to speculate on asset prices without owning the underlying assets. Because it operates outside traditional market hours, trading continues around the clock. The answer comes down to one word. Unlike many crypto projects that depend solely on hype and speculation, Hyperliquid has a mechanism that investors find incredibly attractive. Hyperliquid uses a portion of its trading fees to buy back HYPE tokens from the open market. Think of it like a company repurchasing its own stock. The process works like this. First, traders use Hyperliquid. Second, the platform generates fees. Third, some of those fees purchase HYPE. Fourth, the circulating supply decreases. Fifth, existing holders potentially benefit. This creates something investors love. If more people use Hyperliquid, fee generation increases. If fees increase, buybacks increase. If buybacks increase, demand for HYPE potentially rises. It's one of the reasons ETF experts believe Wall Street investors are paying attention. Many investors struggle with traditional crypto projects because they often ask, how does this token actually create value? Bitcoin's answer is scarcity. Ethereum's answer is utility. Hyperliquid offers something different. While HYPE isn't stock ownership, its buyback mechanism resembles business fundamentals that traditional investors understand. In a sense, Hyperliquid feels less like a speculative meme and more like a growing financial platform. That familiarity matters. Wall Street's interest accelerated dramatically when ETF issuers entered the picture. Recently launched products include the Bitwise Hyperliquid ETF BHYP, the 21 shares Hyperliquid ETF THYP, and the Grayscale Hyperliquid Staking ETF HYPG. These funds allow investors to gain exposure to Hyperliquid without navigating crypto wallets, private keys, or decentralized exchanges. For financial advisors and retirement investors, ETFs act as a bridge between two worlds: traditional finance, TradFi, and decentralized finance, DeFi. For many, that bridge makes all the difference. Surprisingly, Hyperliquid's rise wasn't initially driven by Bitcoin. It was oil. Last summer, geopolitical tensions in the Middle East created enormous volatility in energy markets. Traditional markets closed for the weekend, but traders still wanted exposure. Hyperliquid never closed. According to reports, crude oil trading activity on the platform surged to approximately $1 billion per day. Suddenly, investors realized something powerful. Decentralized markets don't sleep. When Wall Street shuts down, blockchain keeps moving. That realization may have permanently changed how some institutions think about trading. While Hyperliquid was attracting capital, Bitcoin struggled. Spot Bitcoin ETFs experienced notable outflows. The once red-hot iShares Bitcoin Trust, IBIT, reportedly fell roughly 16% during the recent sell-off. Investors who bought Bitcoin solely because everyone else was suddenly began searching for alternatives. Hyperliquid appeared at exactly the right time. Not necessarily. The two serve very different purposes. Bitcoin remains the king of crypto. It has the strongest brand, the deepest liquidity, and the largest institutional adoption. Hyperliquid, however, represents something newer. Whether it succeeds remains to be seen. Before rushing into hype, investors should remember that opportunity and risk often travel together. Potential concerns include: governments worldwide continue to debate how decentralized platforms should operate. Future regulations could impact growth. Hyperliquid isn't alone. Numerous decentralized exchanges compete for users and trading volume. Hype remains a relatively young asset. Large price swings should be expected. Its long-term success depends on sustained trading activity. If users migrate elsewhere, the buyback mechanism loses effectiveness. Maybe. What makes Hyperliquid different isn't simply that its price is rising. It's that investors finally understand the story. Bitcoin's story is digital gold. Ethereum's story is the world's computer. Hyperliquid's story is the exchange that pays its users through growth. It's a narrative Wall Street recognizes. And narratives often drive markets. The recent excitement surrounding Hyperliquid highlights an important truth about investing. Markets constantly evolve. A few years ago, most investors had never heard of Bitcoin. A year ago, few had heard of Hyperliquid. Today, as Bitcoin stumbles and crypto ETFs bleed assets, investors are pouring money into a decentralized exchange token with a built-in buyback mechanism and a growing ecosystem. Will Hyperliquid eventually become one of crypto's dominant platforms? No one knows. But one thing is clear. The hype around Hype isn't just about another cryptocurrency. It's about a new vision of finance, one where Wall Street efficiency meets blockchain innovation and the markets never close. Whether Hyperliquid ultimately lives up to its promise remains uncertain. But for now, it's the crypto story that everyone is suddenly talking about.